In the matter of the people of the state of California versus Orenthal James Simpson, case number BA096.
And so, my fellow Americans, ask not what your country can do for you. Ask what you can do for your country.
I haven't talked yet today, so banter.
The people want to hear us banter.
I know. That's all they want to hear. No, I'm in New York City with just me and my husband. We got here on Thursday. Today is Sunday. We're going to a wedding tonight. I'm very excited. It's at the Bronx Botanical Gardens. We've had so much good food. We've seen a bunch of friends. It's been really nice.
Your Instagram has been on fire.
Thank you.
Yeah.
It's been super fun. I've walked like a bajillion steps yesterday. We had like a cocktail party for the wedding, and then we went to dinner, and then my friend was like, let's do something after dinner. And I was like, absolutely not. I have to go to bed.
Yeah.
So I slept for like 10 hours because it's been a long trip, but been good.
Is it amazing being back in New York?
Oh, it's so fun. I love New York. I know we've talked about this, but it's great. We can walk everywhere. I mean, there's so many people. I've seen more people in the past 2 days than I've seen in the past like 6 years combined.
Yeah.
Like number of volume of people like, walking on the streets. There's so many people here, obviously, but no, it's very nice.
Nice. So excited that tomorrow's Labor Day. And you can just be a chill.
Oh, I know, me too. Oh, I'm gonna have a long day tomorrow too. I have to go. Oh, so here's also another thing that happened is on the way here. So my mom is watching the kids. She drove from Las Vegas to Joshua Tree to watch the kids. An hour into her drive, her car broke down. So she calls me on Thursday or Wednesday, and she's like, I'm on my way, but my car just broke down. I'm in the middle of the desert. I don't know what to do. And so I was like, I'll come get you. So she called AAA. AAA was like, we can be there in 3 hours. It's like 6 o'clock at night. So I was like, I'm on my way. When I was like an hour on my way to get her, she got her car working again because she called her ex-boyfriend who knows about cars. They looked at her engine together over FaceTime, and he found there was like a thing that was disconnected. He had her reconnect it and tie it with a plastic bag, and she fixed it.
That's cool.
And then she was driving, and then I drove, and we kind of met 2 hours in the middle, and then I followed her home. But it was a long day to get here. But I'm really proud of my mom. Oh my God.
How on earth would
It's
it
really
take
cool.
you less time than 3 hours to have gotten to her?
She was in like the middle. She wasn't already there yet. Like it was, you know what I mean?
Yeah. Okay.
And then she drove 2 hours. Like I ended up driving 2 hours, and I met her at a gas station.
Got it. Okay. So what was gonna save that much time? You have bad luck with cars, man.
I know, but we're fine. She
You're
did a great
fine
job.
now.
I'm proud of her.
And
Yeah.
you fly back when?
Tomorrow. So we fly back tomorrow night, and then we have to drive home from Las Vegas because we flew out of Las Vegas. So we have a long travel day tomorrow too. But today's a good day. We got brunch with family and then the wedding.
Nice. That's exciting. That's a really good little trip, and it's great that you all got to have a little romantic getaway together.
And the weather's perfect. So that's also really nice.
And the weather's perfect. Cool. Well, let's go ahead and record so we can get back to weekend, Labor Day, long weekend stuff and stuff sitting in front of the computer. Welcome to Doomed to Fail, the podcast where we cover 2 stories, one historical, one true crime, about things that were doomed to fail. I'm Farz, joined here by Taylor, who is in New York. Hi, Taylor.
Hello.
That was effortless. I did so good on that one. I barely even
You did.
sounded my words.
I loved it.
Talents. I was made for podcasting. So I assume that I go first today.
You do.
I go first. Okay, then why don't you tell us what you're drinking?
Yeah. I'm looking it up right now, and I cannot pronounce any of these things that I got. I wanted to find a drink from Indonesia. Here's one. Coconut water. Let's drink coconut water.
I love coconut water.
That's what I'm drinking.
Yeah, that's awesome.
I do and I don't. The last time I had it, I had morning sickness when I was pregnant with Florence, and so it kind of makes me feel gross because it reminds me of that. But I used to.
It's fair.
Like it didn't cause it, but it happened to be there when it was happening.
It's like me and tequila. The first time I got drunk, my cousins got me drunk on tequila when I was like 16, and it took like 20 years to drink tequila again.
Totally. Your first one's always gross. Yeah.
Yep. So I'm drinking what's referred to as a dirty chai latte. This is not. I'm not familiar with this stuff, and so usually I just get a coffee. But these are really good. If you haven't had dirty chai latte, they're really good.
It's definitely the second time you told me this.
I know. I'm a broken record. So okay, I'm gonna go into my story, and I'm gonna start by shouting out our favorite podcast, Last Podcast on the Left,
Oh my
because
God.
they did a special guest episode, a Q&A with the best podcaster ever, Dan Carlin, and it was awesome. Did you
Was
listen to
having
it
fun.
yet,
I haven't
Taylor?
listened. No, not yet. I haven't had time, but I'm gonna listen to it on the plane ride home. But I definitely was listening to last week's episode, like the question episode, I think, and they were like, yeah, well, the person we're interviewing next week, it's very special. And I was like, oh my God, I know it. It's gotta be Dan Carlin.
It's
It's
got to be
gotta
Dan
be,
Carlin. Yep.
So I'm so fucking excited for them. It's the best.
If folks don't have never listened to it, Hardcore History and his Hardcore History Addendum and Common Sense are the 3 podcasts that he runs. They're amazing. It's probably the most well researched, most articulate way of like describing historical events. And one thing that they asked, I'm gonna do a little bit of a spoiler. One thing that they asked him, I think it was Marcus or someone, was somebody asked Dan why he's so obsessed with context. And
Mm-hmm.
that simple question spun into a conversation that I was like, whoa, it went in directions I didn't anticipate, but it was awesome. It was incredible. And it got me thinking about the topic of today. So the reason I thought it was so complicated and interesting, and I'm totally paraphrasing what his point was on this and putting my own spin on it, but he's basically saying that, look, if you have all the context on any event that goes on, it would never end. It would never end. Like one thing begets another, begets another, begets another. So you have to be like, even in the context of like history, you have to be an editor in a way, because you have to like have the cutoff point of like, and then we start here, because otherwise it would just be like, it would be forever long. And I actually really, really enjoyed that, because it made me think about politics in particular, where I was like, if you actually go far enough back with people's political beliefs and their families and everything, it's like you can see that we're all like kind of the same. We're not actually terrible human beings. But that's aside. It got me going in that direction. But I started thinking about that within the context of like our discussions here. And so what I looked up was the most trending topic in 2023, which is AI. And I was like, I wonder, what is it in the context of everything of like how we ended up at ChatGPT and Bard, and where history kind of starts that is with a guy named Luigi Galvani, who saw frog legs hanging at the local market from copper hooks, and it would start twitching. And this was in 1791. So that was like the first guy that was like, electricity is the thing that's running through our system that's making us, and then that segued into cybernetics, which is a field that advanced control of electricity through networks, then to information theory, which goes into the storage of that information, then Alan Turing's theory on computation, and all that kind of culminated with this kind of concept of like mechanical brain, which is AI. But like that's like a brief example of like context, like going so far back sometimes that it almost even makes sense. Like we're starting with this guy Luigi in Bologna looking at frog leg switching, and then we end at like the understanding of like AI and ChatGPT. So anyways, I just want to put that as like a little bit of an aside, but I want to go through another historical event that's kind of recent and people know a lot about it, but there's probably things that people don't know about it. And so I'm going to go into the context of why this historical event actually ended up happening.
But before you start, I want to let everyone know that my number one strength finder is context. Continue.
What's strength finder?
It's like a thing where you like do a quiz and you get like 5 your top strengths. Mine is context.
Interesting. Okay. Cool. Good. So what I'm going to be discussing is the 2008 financial collapse.
Ooh, that's exciting.
Because it's kind of true crime, it's kind of history, and there's a lot of factors that played into it. And I literally just watched Margin Call by accident last night, and I got obsessed with it again. Have you seen it before?
Amazing. Continue. I don't think so.
Zachary Quinto's in it. Jeremy Irons is the boss.
Oh, I love Jeremy Irons. No, I've seen the one. What's the other one?
Big Short.
About the housing crisis. Yes, I've seen The Big Short.
So I'm going to go into like the Great Recession itself, like very, very briefly, because again, I think that people mostly understand what happened. So I'll just frame it this way. Historically, housing prices have always gone up, and the appreciation rate of a home over the course of 7 to 10 years, for example, nationally is around 34%. So it's always no, not always, obviously. It's mostly a good investment. So
it had been consistently a good investment for a long time.
Exactly. And the reason
Hmm.
they go up is because there's always more people who want homes than there are homes available on the market or people who are credit worthy enough to acquire homes. And so
Hmm.
the supply and demand side of it's always like there for that kind of growth. And investors wanted to put their money in the safest place possible. So banks started creating mortgage-backed securities to sell these mortgages at a more profitable rate, given that they were a safe bet. So that's kind of like the initial start of all this. But the more of these mortgage-backed securities banks started issuing, the more they needed to issue to keep growing, and so they dropped their requirements on credit worthiness to bring in a
Hmm.
different class of folks to buy homes. And these were
Hmm.
called MBSs, mortgage-backed securities, and these were usually at rates that were they were like teaser rates or called adjustable rate mortgages. And so they would go in at like a low interest rate, and then the interest rate would adjust, and then these people could not afford it, and because they were not super financially savvy, they didn't totally understand what was going to happen anyways. And so what ended up happening
Right.
is that these people would get foreclosed on, they go into default, and then the supply demand ratio of mortgages and homes and people buying homes totally flipped. And so people were now underwater on their homes. All those safe bets that people made on mortgage-backed securities went away. Basically, that was just it. It makes sense, right? Like it's not super
Hmm.
complicated, I would assume, right?
Right.
Okay.
No, that totally makes sense. Yeah, yeah.
So there's a lot more to it. There's another concept there called credit default swaps, which is basically insurance taken on these mortgage-backed securities that also tank. Like a lot of horrible shit was kind of going on there. But anyways,
Hmm.
so that's the gist of where we landed in 2008. I'm gonna go far back enough to hopefully provide the appropriate historical context per Dan Carlin and how we kind of
Hmm.
landed here. And so this stuff is so crazy because you see how it kind of plays out across like the political spectrum, and you're like, okay, it's always been
Hmm.
like this. Like there is like it's all uniform. So I'm gonna start with Jimmy Carter. So in
Okay.
March of 1980, Jimmy Carter signed into law the Depository Institutions Deregulation and Monetary Control Act of 1980, which is abbreviated as DIDMCA. Great name.
Okay.
And
Not too long. Perfect.
it's yeah, like there were not marketers who came up with this. So this bill had a ton of things in it, and it's all like really dry and boring. So I'm not really going into it. But the main part of it is that it helped what's known as savings and loan institutions become more
Hmm.
competitive in the banking industry. So are you familiar with what a save? I didn't know what this was. Do you know what these are?
Is it like a more local bank? But maybe not.
It's a type of bank. It's a thrift bank, is what they originally were called in like the 1930s, which is just a
Hmm.
place to put savings in. That's it. Like that was their job. And so back in the day, this was just for that. You could get some personal loans here or there, but from a regulatory perspective, they were really boxed in terms of what they could do and how they could possibly make money. And as a result, when interest rates would go up, depositors would withdraw their cash to put them into other investment
Hmm.
vehicles that would earn more interest than a savings account.
Right.
So when Carter passed this law, it basically opened up an opportunity that provided for the amount of deregulation that you're going to see the upstream effects of in 2008 because it opened the doors to savings and loan associations to start allowing people to take out traditional mortgages like what we would consider today as a mortgage. It would allow them to do that. It gets
Okay.
that on its own is irrelevant. Well, it starts the process, but it's somewhat irrelevant. Then in 1982, our old friend Ronald Reagan signed a bill called the Garn Saint Germain Depository Institution Act. They need marketing specialists on these names. He signed
Oh
this
my
thing
God.
into law, and what this allowed financial institutions to do was to give them adjustable rate mortgages, ARMs essentially. So the way an
Hmm.
ARM works is that the interest rate on the mortgage fluctuates with the federally set interest rate. So for example, during COVID, the Trump administration, the Feds there they adjusted down the interest rate. So for example, I think the interest rate was like 2.5% or something. It was something crazy. I got my
Hmm.
house like 2.75% interest. It was like crazy cheap money back
Yeah.
then.
Hmm.
And I think now it's somewhere around 7%, like maybe 7.3% or somewhere around there.
But
But
you're locked into yours, right?
I'm locked in. Yeah.
But if you had an adjustable one, it would be seven now.
Yeah. Think about how much money that is. Because if you look at your
Yeah.
mortgages, the first like 15 years, your mortgage is basically just all paying interest. And so when that interest rate adjusts 2.5% to 7% on
You're
like a
never gonna catch up.
$500,000,
Yeah.
you'll never catch up. And so, but this was the start of it. Ronald Reagan signed this law in 1982 was kind of the start of that. So
wait. So
yeah.
give me a second. So there's something on Instagram where I'm obviously like this pops off my feed every once in a while where it's like, oh, is something terrible happening? Oh, guess whose fault it is? Ronald Reagan. We could like go back to seeing that it's all Reagan's fault.
Yeah. I mean this thing is weirdly deceptive. I wrote down here that to me, this was probably the biggest factor in this, because if you look at who's taking out mortgages that they ultimately will not be able to afford, that banks aren't really regulating, it's going to be people that don't understand this shit. Like, they're not going to understand what federally set prime interest rates look like and where they fall along that. And so they don't understand that, like, a 2% swing one way or the other on your mortgage on a $300,000, $400,000 house, it's going to be a shitload of money. And so in my mind, I'm like,
they just don't, or they just like don't, not that they don't even understand it, but like they don't think about it because they can finally afford a house.
Exactly that.
Yeah.
And one thing, so I read a CNN article that was published in 2007, and that was right before interest rates were about to reset. And what it was talking about was, it was calling out what was about to happen. It was like, hey, like, interest rates are about to reset. Like, this is going to have a dramatic impact because 80% of those mortgages were ARMs, adjustable rate mortgages. And so it was a huge issue. So the article that I read went through a hypothetical that said that if you bought a house for $200,000 in 2005, which is when all this was going on, your monthly payments would be about $955 per month. When the loan resets, it'll be $1,331 a month, a 39% increase in your mortgage. And again, 80% of these were adjustable rate mortgages. And so that was a big part of it. And again, to your point, we can kind of track everything back to Ronald Reagan, which is incredible. 1% having that kind of an impact on things. And to me, the ARM is like the most deceptive side of this. There's a grosser part of this that we're going to get into here in a moment, but that's the most deceptive part because it is taking advantage of people's inability to totally understand what they're signing up for.
What was his reason to do it?
All of it kind of boils down
Rich get richer?
Trickle down? It all boils down to like the lobbies, the banking lobbies, because this is like an attractive thing to a bank, because you can think about that. How cool would that be if I could sell you something today for like nothing, because you'll buy it because it's nothing, and then it's all upside on the back half because I can just adjust the interest rate, and then you have to pay me a shitload of money. Like,
you owe me more.
Perfect. Yeah. And then we get to 1999, which is when Bill Clinton signed into law the Gramm-Leach-Bliley Act, which allowed this one's the most fucked up one. So this allowed consumer banks, like regular depositor banks, to issue home loans and then also operate as a financial institution on the back end. So think if your credit union could take part in the same financial activity as Goldman Sachs. That's what this is. The reason I wrote this is like the most messed up part of this is that if I'm the bank that is issuing you that mortgage, and I'm also the bank that is selling that mortgage on the back end after you close, then I'm on both sides of that transaction, which means that I have no incentive in operating in any sort of like I'm always going to make money on both sides of the transaction. So like, I don't really care if you're qualified for this mortgage, because who cares? I'll make my money on the back end when we sell the mortgage-backed securities. And so that was the biggest one. This was a repeal of what's called Glass-Steagall. So in 1933, this bill called Glass-Steagall was enacted into law. And what that was done specifically to break up the consumer side of banks from the investment side of banks. And then Bill Clinton just signed this thing and it's gone. It's gone. Yeah. And then later on, after this happened, Dodd-Frank was signed into law that put more protections around this. And even that, now Barney Frank is trying to get that repealed. So I don't know what's going on there, but that's kind of...
Barney Frank is still alive?
Yeah, he's still alive.
I'm
He's
shocked.
he's still alive, and so there is a daily episode. We're plugging a lot of podcasts today. So the daily is the New York Times podcast, and that's like kind of how I start my mornings. Most mornings is just listening to what they have to say. And they did an episode about a month and a half ago on Dodd-Frank, and they interviewed Barney Frank, who is now. He
Hmm.
was one of the main proponents. Like, we need to like punish these financial institutions and all that stuff. And he now is an advisor for a bank and is trying to get Dodd-Frank repealed. So he's lobbying and advocating
Wow.
to Congress to get the bill that has his name on it repealed. So there we go. Government as usual.
Well, he's young. He's a young 83.
He's a young spry, 83 years old. Um,
Hmm.
and so now I'm going to get to like probably what seems like the least likely reason for why this ended up happening. 9/11. Is that weird, right?
Okay. No,
So
go ahead. I'm not surprised.
so I gave so the reason the Trump administration reduced interest rates to 2.5%, like I mentioned earlier, is because they were trying to
Hmm.
drive economic activity when COVID hit. When COVID hit, everybody was scared, everybody was sitting at home, nobody wanted to go out and buy things. And the way you stimulate the economy is you lower interest rates. People are like, oh, cheap money, I'm just going to go spend. And then
Hmm.
things change, and now again, like we're at 7.5%. So similar to what happened during COVID, the Bush administration did exactly that during 9/11. So obviously the entire country was gripped with fear, and transactions weren't really flowing, and all the terrible things that came out of 9/11 happened. I didn't know this. When 9/11 hit, the way Bush, the administration, tried to stimulate the economy, they dropped interest rates to 1%,
Whoa.
which I think I couldn't get the exact number on this, but from what I could see, historical records, the charts show like the 30-year
Hmm.
rates, and it was like right after 9/11, it just like dropped to the ground, and there was nothing that was lower than that. And so I think that is the lowest interest rate the government has ever issued in the history of the U.S., which is really interesting. So
Wow. Wait, I'm sorry. I'm about to go to t Dallas on 9/11, and I hate having to say it over and over again because you're like, "Oh yeah, we have these meetings on the 11th and whatever." But then I just was thinking about, remember the best September 11th ever where we went to see it in the movie theater?
oh yeah, with Jay,
And I
right?
was like, yeah, I was like, this is the best September 11th because we went and got burgers at that one place and then we went and saw it.
Hell yeah, hell yeah, yeah, man. I think that theater got sold, right? Quentin Tarantino bought it.
I don't know, but I know it used to be like the Hollywood of Babylon. There's a whole bunch of stuff like that. That specific plot of land is really interesting.
Yeah. No. I think he might have bought Los Feliz 3. That was the Egyptian. We saw it at the Egyptian.
Yes.
I can't remember if
Was
he
that
bought that or not. But that was a fun day. So, but basically, so in 2000, when 2001, when 9/11 happened, until 2003, interest rates stayed at 1%. And so
wow?
obviously everybody was buying. So there was a
Yeah.
huge bubble, there was a huge spike in the supply demand side of things in terms of people going out and trying to buy a house. And that resulted in these financial institutions saying we need more people buying, and so we're going to offer these adjustable rate mortgages and lower our standards. I read these stories about how they didn't even look up people's jobs. They didn't even confirm employment. They nothing, because there was so much money in reselling these things that like they just didn't care. And
They just
so
expected them to fail.
yeah, because that's the part of it, is like in everybody's mind they're like, who gives a shit if they don't pay, it doesn't matter, because the house price is going to go up anyways, and we'll just go ahead and sell that property, right? Like, we don't, who
Yeah.
cares? We'll foreclose on and
Sure.
sell the property. But it doesn't work that way, because if there's so much property in the market, then the price and the value of that property it's underwater. You're never going to
Hmm.
recoup your investment in it.
Hmm.
So that was kind of like the historical piece of this. And then it made me think of what upstream impacts were there to what ended up happening. Taylor, do you remember what else was going on in 2007 and 2008?
I graduated from my master's degree in 2007. Did that have a global impact?
That did not have a global impact.
That's all
2007,
I ran.
2008 is when the presidential campaign of Barack Obama and John McCain was running. And
Oh, right.
and
That.
that little boondoggle. And It's worth noting that I did a lot of research in terms of like what was going on back then because I don't remember. I mean, I was active in politics and stuff, but I wasn't like working in it. And so back in the day, John McCain's claim to fame had nothing to do with economics. It had to do with foreign policy. Like he was a foreign policy guy.
Hmm.
It had nothing to do with his acumen in economics. And so there was a lot of things that happened on that campaign that made Obama seem like super qualified to handle like an economic downturn. So, for example, there was one interview I saw of John McCain being asked by a reporter how many homes he owns, and he literally
Oh
tells the
God.
reporter, he goes, "I'm gonna have to have my staff get back to you with an answer to that." The answer back then was seven. They owned seven homes together, and Obama released a political ad called Seven, just talking about how out of touch McCain was with the rest of the country. Well,
Ugh.
1 in 200 Americans was being foreclosed on at that time. And this guy was like, I don't know how many homes I own. The other thing that he did was he was in Florida doing like a campaign stop when he said that the fundamentals of the economy are strong the day Lehman Brothers filed for bankruptcy.
I
So
remember that day because I worked in finance that day. I worked at a
wait, you
hedge
were in you
fund
were
during
in
this
New
time.
York?
Yeah, yeah, I was in New York. I worked at a hedge fund. I knew people at Lehman, and then all of a sudden, all of our Lehman meetings were canceled, and it was like we're fucked.
What was that like? Did you keep working?
I did, but things were very different. Well, very different in that we used to go to the Bahamas every year, and then we stopped. Like we used to like kind of spend with this like reckless abandon that my boss was like, "What do you mean I can't fly first class to Asia anymore?" And I was like, "It's a $20,000 difference between a first class and a business class ticket. Can you justify that?" And he was like, "Ugh." And then we'd made him fly business class. Like we were spending like just stupid amounts of money. And then we stopped.
Was it man, you've been part of so much of this stuff because you were there during 9/11. You were there when this happened too. In my mind, I was like,
Hmm.
there's like earth shifting moments, and those were two of
Yeah.
them.
We worked with Lehman Brothers. We worked with Bear Stearns was gone. Like just like people that we knew were just gone in like a day.
How long did you keep working? Did you stay in the finance sector?
Yeah, I stayed there till I left for Nation Builders. So I stayed a couple more years.
Wow, okay. Yeah, wild, wild. But that was kind of the impetus of this. The impetus of what ended up happening too was that so Bush was the president back then. The Republicans were in power, and so generally speaking, when your party is a party in power, when things are really, really bad, you don't get elected. And so I looked up the old polling results for the 2008 election. McCain went from 37% negative media coverage, according to the Pew Research Foundation, to 53% negative the day Lehman Brothers collapsed, and then 70% by the time the second debate came around. And the reason was almost exclusively the economy. He just seemed out of touch. He seemed
Yeah.
like his party was the one that was responsible for this. And so it made me think of like, okay, so you have Jimmy Carter signing this law in 1979. It worked all the way up to this financial collapse in 2008. And then what ends up happening if this didn't happen? If you didn't have all that historical context building up to this, would Obama have been elected
Hmm.
president? Probably not. Probably not because he was like a young whippersnapper. Like he was, only 2 years in the Senate before he ran for
Hmm.
president. Like you have McCain who was like obviously like, and if we didn't have Obama, did we have Trump? Like there's so many things that like just stack on top of each other.
Who did we talk about? Or I talked about the guy messing up and then Obama got elected because like Jack Ryan was the
Yeah,
guy who like
yeah.
brought us to the sex club. I got talked about something similar to that, but there's that couple things. One, I would like to officially repeal the 22nd Amendment because I want Obama to be president again because I love him.
I would be
Just
okay with that.
let's just bring that man back. We need him. Um, Also, do you remember when like Mitt Romney was campaigning and like a kid was like bought some ice cream or something and Mitt Romney was like, "Oh, let me buy your ice cream for you," but he only had hundreds in his wallet
That's awesome. What a
and he
baller.
like couldn't give the kid like $1. He was like, "Oh," like he tried to buy like a bar of chocolate or something from a kid. And he was like, "Oh, we only have hundreds in my wallet," which is hilarious and like very out of touch. And then a third thing is we've been passing by the Trump Tower a couple times. It's like right kind of where we are. And my husband used to work on The Apprentice. Did you know that? And he knew
What?
Trump. He used to do like camera work on The Apprentice, and he had like been around Trump before. And we're talking about like what if he had like like if you go back in time, and stop this person from being president, mom would like be in jail, but he'd be like, I saved the world. People would be like, what is wrong with you? You just like did not save the world. He'd be like, yes, I did. He'd be like, Taylor, because like we wouldn't have been together, we wouldn't have had kids. I was like, but you would have saved the world.
He knew
What does
Trump.
that look like? So,
You actually met him? Wow, interesting.
yeah.
What,
One
what
time
is?
Trump asked him to come and
Go
okay.
ahead. Sorry.
Oh, Trump asked him to come back to the office in his limo and Juan said no. Who knows what would have happened?
He wanted.
He
Why
did.
did he want Juan to come back to it?
I don't know. It was like because he had to go back with the equipment or something. But he was just like, "You come with me." Mom was like, "No,
So
whatever,
Juan
fine."
thinks that he was going to get
No, no, I don't know what was
sexually
going to happen.
assaulted.
It's a weird
Um,
guy.
he's definitely a weird
Not
guy,
one.
and we're definitely going to have a repeat of the 2016 or no, the 2020 election in 24. It feels like. But going back to the true crime side of this, did you know this, Taylor? One person actually went to jail for the 2008 collapse. Did you know this?
No, who was it?
This poor bastard. His name is Kareem Sarageldin. He is the only person to have served a jail term for his role in this. Apparently, at the time, he worked for Credit Suisse, and he falsified records, basically like overvaluing the prices of mortgage-backed securities just to make like more profit off of them. And he ended up getting sentenced to 30 months in prison and having to pay back Credit Suisse $25 million. This guy made $7 million per year in 2008.
Wow.
Like, what are we doing with our lives?
That's incredible. I mean, we're not
So
gonna go to jail, I don't think.
we're not going to go to jail, but we could also be doing better.
Okay,
But yeah, so
true.
that's kind of where I ended things because it was, again, if you wanted to, you could keep tying this thread further and further back. I ended up researching the 1966 savings and loan crisis because that was also like a part of this is like the failure of all these savings and loan institutions because they couldn't compete, which led to the Jimmy Carter thing. It's just thing on top of thing on top of thing. And the end result is that America is a capitalist country, and the number one variation of capitalism in this country right now, at the very least, has to do with financial instruments and investment institutions. Wow. And so there's a lot of reasons why these things are not regulated, and they're constantly getting deregulated because that's what we want, apparently. So TBD, I guess.
What do you think's next?
I don't know what the bubble is going to look like. Because we already had a tech bubble, we had a housing bubble. I don't know. I don't know what's coming, but there's gonna be something. In the movie Margin Call, Jeremy Irons' character was like the main CEO of this financial institution. He lists every financial collapse, and it's like every decade to like 15 years, like something hits, and we're kind of due for one, which it feels like we're in the middle of anyways. It feels like the economy is pretty shitty right now. Like every week we read about tech layoffs, for example. And so I don't know, maybe we are in it, but TBD, I guess.
Yeah, it's like a constant ebb and flow, but it's interesting that people make decisions and have policies that are like specifically to fuck people over.
Yeah. I mean, that is the
To make
most
money.
obvious, transparent thing of like the rich eating the poor is you look at what these people make. Like this guy's making $7 million a year, issuing these shitty fucking mortgages that he knows that these people can't pay, but he knows they're desperate for a house, and so they'll do it. And that is like the most predatory thing. It's just, and they don't care because they're like, it doesn't matter if you default. Like if you foreclose, the models tell us that we can just sell your property and recoup everything anyway. I don't know. It's really gross. It's really gross.
Totally. It's so gross. You're like a real person who's like has to leave their house. It's terrible.
Yeah. So that's my story for today. I do highly recommend Margin Call. It's if you have YouTube,
look it up.
Who doesn't? It's actually free on YouTube. That's how I started watching. I was like scrolling YouTube and it was like recommended as a movie to me and it was free and I was like, fuck it, let's watch it. And
that's how you accidentally watched it. It was that
Kevin Spacey? Yeah, it's with Kevin Spacey, it's with Jeremy Irons, Zach Quinto. It's really, really good. It's very moody. It's essentially the gist of it is that it is the 24 hours before the collapse hits, and this one financial institution whose name they don't reveal discovers what's about to happen with like basically most of their assets. And Yeah, it was shady and crooked and shows how the financial system works, which is not great.
Yeah, it's not great.
But that's my story today. Sorry for making this a more stressful than usual call with Luna being a psychopath. The reason is that Mrs. Farz and her dog are out in that room, and I'm in here, and I need to keep the doors closed. And she gets crazy because she can't get to me. But if she got to me, she'd want to get to the dog. And so, anyways, that's where all the barking comes from. So apologies, everyone.
No problem.
Sweet. I'll go ahead. Is there any listener mail or anything?
There is. Did you see that I guess you're not getting the mail yet, huh? I think you have to do something we need to look at our settings. Nadine emailed again, and she is still listening up in Canada and had some positive things to say about last week's episode about the Catholic Church, some stuff that people maybe don't want to say out loud, but they heard me say it, and I'm excited about that. So
Wait, what was it?
and she had some ideas too. I'll forward it to you. No, just that it's hard to be angry out loud about some of these things, but sometimes it's nice to hear it.
Nice. Yeah, please do.
And my friend Ben said, baller takedown of the Catholic Church as well.
We showed them. Yeah, I don't know why I'm not seeing. I was getting them briefly, and now I guess I'm not getting them. But yeah, I'd love to read that. But yes, please write in if you know us, or if you don't know us, doomtofailpod@gmail.com. When we're rich and famous,
and everything
we will remember you.
doomtofailpod.
Everything.
And we also have a thing on Instagram. If you share our Instagram post about our stickers, I'll mail you one. So just share it. I'll mail you one.
Wait, are you gonna mail me the stickers?
I did. You didn't get them yet? Check your mail. Have you checked your mailbox?
I'll go check my mailbox. If I had the stickers, I'm gonna go to the coffee shops today and start hustling.
I'm sure they're there. Just check the mailbox.
Okay, I'm gonna go check. Sweet. I'll go ahead and cut this off, Taylor, and restart here in a moment. Bye all.
Thank you.